David, I want to show you where Tesla is in terms of hitting its annual target, the guidance that they put out earlier this year to deliver 1.8 million vehicles after exceeding expectations for the second quarter, delivering 466,000 versus the estimate of 445,000. They're now basically halfway towards 1.8 million, and almost everybody agrees unless something dramatically changes, they will hit that target because they're expected to increase production and increase deliveries in the second half of this year.
A few days ago, Tesla released its financial results and shareholders letter for the second quarter of 2023 after market close. However, instead of affecting the stock positively, the company's stock dipped despite satisfactory numbers reported by the company for the quarter. In fact, when Tesla reported earnings after the bell, it showed a record for quarterly revenues, but lower margins thanks to price cuts and incentives. Although the stock price remained flat after the initial report, it began dropping during the earnings call as CEO Elon Musk and other executives failed to deliver precise specs and start of delivery dates for the Cybertruck and for a robotaxi-ready vehicle. It also didn't help matters any when Musk and other executives said during the call that vehicle production would slow down during Q3 due to shutdowns for factory improvements. It's now down about 5% after hours. Prior to the release of the Q2 2023 earnings report, Wall Street estimates predict Tesla will bring in around $24.9 billion in revenue for the quarter, which is nearly 50% higher than year-ago sales of $16.9 billion. Instead, Tesla reported revenue of $24.93 billion versus $24.47 billion expected according to Refinitiv. It is, however, close to Wall Street estimates. In terms of earnings, Tesla reported 91 cents per share adjusted versus 82 cents per share expected as per Refinitiv. Meanwhile, net income GAAP was $2.7 billion, an increase of 20% from last year. Operating income, however, was off 3% from the year-ago quarter at $2.4 billion. By way of comparison, during the first quarter of 2023, Tesla reported a net income of $2.51 billion on revenue of $23.33 billion. During the second quarter of last year, Tesla reported net income of $2.27 billion on $16.93 billion in revenue. On the company's recent earnings call, Musk said, "We continue to target 1.8 million vehicle deliveries this year, but expect Q3 production will be a little bit down because we've got summer shutdowns for a lot of factory upgrades." Early this month, Tesla reported 466,140 total vehicle deliveries for the second quarter and said it had produced 479,700 electric vehicles. Deliveries are the closest approximation of sales that Tesla reports. Those deliveries were higher than Wall Street expected and were partly driven by incentives and discounts. Correspondingly, operating margins came in at 9.6%, the lowest for at least the last 5 quarters. The total gross margin came in at 18.2%, also a low for the same period. Tesla explained in a shareholder deck that its lower margins in the second quarter resulted from reduced average sales prices due to mix and pricing of the cars it had been selling, and the cost of ramping up production of battery cells it designed in-house, known as the 4680 cells, among other factors. Revenue from Tesla's core automotive business rose 46% year-over-year to $21.27 billion, about a 6.5% increase sequentially. Its energy generation and storage revenue from solar installations and backup batteries rose 74% year-over-year to $1.51 billion. With more vehicles on the road, Tesla's service and other revenue, including fees for out-of-warranty vehicle repairs, rose 47% to $2.15 billion. Despite this, Tesla's stock price has been facing correction and is returning from the overbought territory after the release of its Q2 earnings. Analysts believe the Tesla stock price needs to accumulate buyers in order to sustain at the current level and revert back. Moreover, Tesla shares may sustain above the $250 support zone to revert toward the $280 mark. For now, Tesla's stock price has gained 3.69% in a month and 57.78% in the last 3 months. Moreover, Tesla shares rose to around 91.37% in the last 6 months. Tesla's share price has soared around 119.48% year-to-date, suggesting the maximum recovery of Tesla shares during 2023. Technical indicators suggest the downfall of the Tesla stock price. The Relative Strength Index showcases the downtrend momentum of Tesla shares. In light of this, it may be safe to say that the company's Q2 earnings call was not well received. From Wall Street's point of view, the analyst community felt the report and subsequent earnings call provided no major surprises and were better than feared. Overall, this was a Goldilocks Q2 print by Musk & Co., given all the noise surrounding the story heading into this quarter, Wedbush analyst Dan Ives said in a note to clients. Ives also raised his price target to $350 for the stock. We expect the shares to trade modestly lower, as the current valuation likely needed a stronger Q2 outcome. That said, no major surprises here either, Citi analyst Itay Micheli said in his analysis. Guggenheim's Ron Jusico, who has a sell rating on Tesla, was less sanguine. Overall, while the print was better than feared, forward-looking pricing, production, operating leverage, and demand commentary will likely weigh on shares following the considerable run in the stock, he said. When asked about whether investors can expect to see Tesla automotive gross margins stabilizing or rising after price cuts and factory improvements in the near future, Musk demurred. The short-term variances in gross margin and profitability really are minor relative to the long-term picture. Autonomy will make all of these numbers look silly. Tesla's research and development cost rose to $943 million from $771 million in the first quarter, with the company writing in a shareholder deck that it is focused on being at the forefront of AI development and has started production of its Dojo training computers. Notably, Tesla's crossover, the Model Y, became the best-selling vehicle worldwide in the first quarter of 2023. The much-awaited Cybertruck was mentioned too. Tesla said in an investor deck that Cybertruck factory tooling is on track, but the company is only producing release candidate builds so far. The news could disappoint fans who are eagerly awaiting the start of deliveries for the angular sci-fi-inspired pickup that Elon Musk first promoted in 2019. In recent days, Tesla posted a photo via its social media account on Twitter showing factory workers crowding around a Cybertruck in their Austin, Texas facility. The tweet said, "First Cybertruck built at Giga Texas." On the earnings call, Musk said that the Cybertruck would include lots of new technology, with 10,000 unique parts and processes. Given the standard line that it is always difficult to predict the ramp initially, Tesla will be making the Cybertruck in high volume next year, and we will be delivering the car this year. Musk also said Tesla will be spending more than $1 billion on Dojo over the next year. Dojo is a supercomputer that Tesla is developing for AI machine learning and computer vision training purposes. Tesla gathers video clips and data from its customers and company vehicles to improve existing software and to develop new features that become part of its driver assistance systems. You see a lot of AI companies doing, LLMs and whatnot, and I'm thinking, if they're so great, why can't they make a self-driving car? Because it's harder. Musk has been promising Tesla would deliver a self-driving car since at least 2016, and at that time promised a Tesla would be able to complete a cross-country trip with no driver intervention in 2017. So far, that still hasn't happened. The company's driver assistance systems, marketed as autopilot or full self-driving capability in the US, requires a human driver ready to steer or brake at any time. "I know I am the boy who cried FSD," Musk said during a question and answer session during the call, "but I think we will be better than humans by the end of this year." He said Tesla is focused on developing self-driving tech for the US market, but then again, that's for the future, regardless if it would happen in the near or far future. For now, let's focus on the now. Tesla reported revenue of $24.9 billion for the second quarter, topping street estimates for $24.51 billion, with adjusted EPS coming in at 91 cents against estimates for 81 cents. That revenue figure represents a slight gain from Q1 and a jump of over 45% from a year ago. On the profitability end, Tesla reported adjusted net income of $3.1 billion compared to estimates of $2.87 billion and more than the $2.9 billion adjusted net income from Q1. Although these numbers brought smiles to the shareholders' faces, it was fleeting. Overall, Tesla's stock price is now experiencing a correction after being overbought and beginning to decline immediately following the release of its Q2 earnings. After the announcement of Q2 earnings, the price of Tesla stock has been experiencing a pullback and is moving back from an overbought area. In addition, Tesla stock increased by almost 91.37% over the previous 6 months. In light of this, technical signs point to the share price of Tesla declining. Subscribe for more.